All right. So today we have Cory with us, CEO of Swan Bitcoin. Cory, welcome to Proof of Thought podcast.
Hi, Charles. It's nice to see you, not in person, since I think we've only met in person so far.
Right. There we go. Living in this virtual world. Let's hop right into it. You're a busy guy. We're short on time today. So treasury companies, we've seen a wave of Bitcoin treasury companies come to market over the past few months, which played out as pretty much an accelerated boom and bust cycle. Lots of the companies are now trading at a discount relative to their net asset value. What do you think will happen to those companies that are trading below NAV and can no longer raise money to buy Bitcoin?
So let's get to that in a sec. But first off, I just want to say congratulations on starting your show. And I also want to say I like that shirt as I liked it when I first met you in New York at a rando bankers conference. And I was like, hey, it's a Bitcoiner. And I came and gave you a Bitcoin pen, if I recall. And then for anyone in your audience that doesn't know who I am, founder and CEO of Swan Bitcoin, used to work for really big companies like Microsoft, McKinsey, Morgan Stanley, Google. My MBA, my finance MBA from University of Chicago can get a drink now. It's 21 years old. So I may have the good hair, but I'm getting a little long in the tooth. And I am a massive basketball nut. And I think basically everybody of the last like 5 years that's into Bitcoin and basketball heavily pretty much works at Swan now, which is kind of crazy. We got a good squad. Okay, so on to treasury companies. So look, at the 30,000 foot level, what you have is Microstrategy was able to raise from people kind of just believing in the theme. And this is from like 2020 when they launched their Bitcoin strategy through 2023 before the launch of the ETFs in the US. And that's when they had that phase of, accretive dilution. And it had a hangover all the way through to late 2024 when they were still able to hit the ATM and essentially, issue equity at a premium to their Bitcoin holdings and then use the proceeds to buy Bitcoin. But, logically and from first principles, without people kind of just believing in ever expanding MNAV multiple, by definition, the only thing you can really count on in a market with open alternatives is leverage, basically tranching Bitcoin returns into a lower risk reward instrument and a higher risk reward instrument. And that's essentially what they've done now. So I and others forecast this in Q4 last year, and then they started issuing these four classes of preferred stock, which are all exactly that. It's lower risk, lower reward returns that lever up the equity returns and make the equity high beta to Bitcoin. And that structurally is also why I called these companies leveraged Bitcoin equities. So that is accurate. Whether you like the acronym or not, BTC is a bad acronym for these things because it's already taken by Bitcoin. And I don't really like ceding the territory to the shats, the shitcoin asset treasury companies that try to call these Bitcoin DATs. I don't know why they always come around and ruin good things.
Yeah, but, I'm not super against the DATs. I just don't like the term DATs, but it just sounds gimmicky.
I mean, look, they sound about as intelligent as they did in like spring of 2023. I'm sorry, it was spring of 2024 when basically the theme that every Wall Street banker was pushing is that Bitcoin is exciting again because everybody's building on Bitcoin, because there were like 100 what I used to call SOBs, shitcoins on Bitcoin, fake layer 2 launches. And that's what MAG was pushing and Ordinals was running, and like all the shitcoin energy was coming to Bitcoin, and Bitcoin Magazine was trying to, push the view of like all crypto should be built on Bitcoin, et cetera, et cetera. And then that energy completely dissipated in the summer because they rolled with Trump instead, and basically rolling with the political energy was better than rolling with the shitcoiner energy. And so that kind of just fell off a cliff, and you didn't need to do that anymore. So basically, as soon as Trump came out pro Bitcoin in spring of 2024, heading into the campaign season, no more VCs invested in SOB companies. Shitcoins on Bitcoin basically died because it was very clear that the game theory was Democrats would have to fall in line as well. and that non-Bitcoin crypto was going to fund the election cycle, and they would basically buy their way out of all this stuff, which they did successfully. So nobody's going to jail, and everyone that got Wharton blockchain certifications over the last 5 years can keep them and hold their heads high as all these chains get rid of their tokens and just become, Wall Street financial IT projects. And we can all kind of kumbaya and be friends with the crypto people again, because it's obvious it wasn't about the tokens, it was about the tech, bro.
The tech, bro. The tech, bro.
Yeah, it was about the tech. It's always about the technology. It wasn't about the tokens. It was just the tech. So that's kind of where we are. So back to the treasury companies, the ones outside the US are still advantaged depending on the market. So in Japan, obviously, there's a 50% Bitcoin tax. And so, having Bitcoin price exposure through an equity is better. There are other places where they're just, large pools of capital, like Sanders Company up in Sweden, H100. They have some kind of like insurance / pension scheme for everybody, and you can trade tax free inside of that, but you can't trade Bitcoin in that. You can't buy Bitcoin in that. So having access to H100 stock for Bitcoin price exposure makes sense, which is very similar to how it was with MicroStrategy and retirement accounts in the US, before you had access to the ETFs. Now it's a different pitch for MicroStrategy. Now it's this, the stock is high beta to Bitcoin, and essentially the returns of the prefs are guaranteed by the huge pile of Bitcoin. And those are both very compelling pitches that he can make for many years going forward. So then we come to the other companies in the USA, and essentially to be able to lever up, because there won't be accretive dilution just through equity issuance. That's not something you can count on for the long term, for sure. You need to be at scale, at least enough scale to be able to start issuing preferreds and to lever up. And then you also have to be creative and a good management team, and you have to look for inorganic growth opportunities, whether that's, getting a bunch of miners to, check in their coins for equity through some kind of convert structure, or it's buying Semler and getting Semler off the train and joining them with you, like what Strive did. Maybe it's getting a bunch of non KYC Bitfinex OGs to put their coins into some kind of like BVI or Cayman structure, or Malta or Isle of Man or something like that, and so they don't have to pay cap gains, but then they get the upside of at least be able to access liquidity from the stock that they are now granted without paying cap gains tax, and now they can take out portfolio loans. And they get that value into the system, whereas before it was just kind of something they couldn't actually spend or access in any way. And so there's a lot of that. There's a lot more coins being checked in than money to buy coins right now. And I expect another announcement from one of these companies this week that will be like another big Bitcoin pile contribution, not new cash going in and buying Bitcoin for the treasury company. So I'm assuming that'll be out in the next couple of days. And so, look, I think probably 2 months ago, in as much as there was the consensus of like the 4 or 5 people that actually understand this shit, everybody else doesn't know shit, but the consensus of the very few number of people that understand this stuff was that you needed like 750 to 800 million of Bitcoin NAV to be able to start issuing preferreds that would have enough liquidity to be attractive. That's come down largely because of all the noise around Stretch, and the noise around Stretch just having such good product market fit, as basically being the same risk profile as a bank account, but having 10% yield. Made people go back and look at the other preferreds as well. So they're looking at, Stride, Strife, and Strike, and, appreciating those too. And I think that has brought down the threshold for how much Bitcoin NAV you need to be able to issue a preferred that will have liquidity. So I think that came down from like 800 to like 500. So
why is that?
Because you can, with like 500 mil of Bitcoin NAV, you can very easily issue like 50 to 75 mil of a preferred that looks like Stretch or Stride. Sorry, Stretch or Strife probably. That's very senior. Basically senior to the entire stack of Bitcoin.
Gotcha.
It's senior to the stock and anything else. So Um, and that gets you on the train. So that unlocks it, and that proves to the market that you're able to lever up and that your equity is going to be high beta to Bitcoin, which is deserving of something. And you're attracting investors that are going to lend you money essentially by buying this pref so that you can go buy more Bitcoin. And that should start that, that I hate flywheel. It's such a dirty crypto term. It's ruined forever. That'll start the, what should that be? Something from operations, conveyor belt. Anyway, the assembly line. I don't know, whatever it is. It's something that's just going to go, but I just don't like the flywheel thing. Um, so it'll start that torque. Maybe I don't know. Uh, to borrow from Saylor, because then his
Yeah.
lawyers don't like saying leverage, right? So it's torque now. Um, so yeah, so I think it's kind of bullish. I've talked to all these guys with like mid-sized stacks that would appear to be just subscale, and like they all have good plans and good backers, and that goes for Sequans, which we are obviously like advising them on strategy, marketing, PR, liquidity, security, custody, all the things. That goes for Empery. I've spent a long time with a lot of time in the last month with Ryan and Tim and that team, and like they're very sharp, and they have a great track record of doing smart things in business and delivering billions of returns to their LPs out of the hedge fund. Obviously, you saw the combination of Strive buying Similar and assembling kind of an all-star team of marketing and thought leadership there, whether it's Pierre and Sharish and Ben and Jeff. Like, it's a great squad. I think Jeff Park is the single most talented and intelligent person that is working in this space. And so, I was probably like super bearish on Pomp's thing just because it was Pomp, but then he recruited Jeff, and I'm like, well, shit, if Jeff's running it, like that's probably going to work. I mean, he's a super genius. So, bullish on ProCap too. Uh, so I don't think there's a single one of these that are kind of, the six that launched this year that were kind of mid-sized between like 3 and 6,000 coins, I think are all going to make it to various degrees. I think probably the most questions probably around Naka, just not sure what the plan is there and like what they'll do. I never understood the go invest in other companies around the world thing in the first place. But they'll get swing after swing after swing because of relationships and because of Megaphone. So like
Right.
at some point, if they figure something out, they're going to be able to promote the heck out of it. And they deserve some credit for having the conference and having the 3 million follower Twitter handle, and like they'll get people talking about it if they ever figure out what they're doing.
Gotcha.
So I think they're all okay in the long term, and they all own a lot of Bitcoin, which, as we can tell from the price today, like that's a smart thing to do.
Yeah, no, fair. Great, good overall summary there. You think you hit on quite a few things. Some of these companies, as you're suggesting, will be okay because they're in certain regions where structurally they're just advantages for people to own those equities. There's some companies still based here in the U.S. that can either use, get creative with their financing, might get to scale where they might be able to issue these preferreds, or they're building some sort of all-star teams. Do you think we're going to see a lot more consolidation in this industry, or do you think more Bitcoin treasury companies will come to market? A couple of months ago, you would hear people in the industry say, hey, there will be thousands of these things. And if that's the case, my question is, why are more of these actually needed at this point?
Yeah, so I think there will be dozens of them launched each year in 10 years. So my thesis has always been that this basically looks like the private equity market, which is very similar to why MicroStrategy got into this, right? Because they had the two main things that make you a target for a go private transaction for a publicly listed company in the US, which is you're cash flowing and you have a low multiple,
Hmm.
which is telling you that the market doesn't trust you to reinvest your profits in the business. They think they have better uses for the money, which is why they want you to do stock buybacks or pay a dividend, and instead of reinvest in the business. And so usually that's the 30 to 40 companies from NASDAQ and NYSE that get taken private from private equity each year. And so that's the pool that I think will choose to be on a let's increase Bitcoin per share over time instead and choose to do that. So that's the market that I think has the uh, long-term play here. In the short term, we are very far away from retail investors, which are fueling this, and from Wall Street analysts, so the research departments at the banks. We're far away from them being able to analyze and fairly value companies that have a Bitcoin treasury strategy and an unrelated operating business. There is no research department on Wall Street that can give good research for a food media company and a Bitcoin treasury company, an e-bike company and a Bitcoin treasury company, a medical device company and a Bitcoin treasury strategy, an IoT company and a Bitcoin treasury strategy. It's not going to happen. And so you basically have, I think, just, Bitcoin related financial services. Microstrategy gets a pass because they're so big and essentially their business is creating, issuing and marketing Bitcoin related securities. That is their job. I think that is going to be the job of all these companies that succeed and hit scale and keep going. In as much as there will be operating businesses, MicroStrategy has BI, which again doesn't matter because nobody looks at it anymore and they basically get no credit for that. If you have a shot at getting value for your operating business in addition to your Bitcoin treasury strategy and your Bitcoin pile times and MNAV, I think that's only going to be if Wall Street analysts and retail are capable of giving you some credit for that, which means it better be damn close to the same theme. And so I think it'll be like Bitcoin asset management, Bitcoin financial services, things like that. And I think that's why you've seen basically every one of these companies claim that they're going to get into Bitcoin financial services someday, right? As they launch, but that's what they say they're going to do because that's what I think the market could digest. But I also don't necessarily think it's a requirement because, if you're kind of an asset manager like a Strive and essentially your business operation is going and trying to unlock cash and Bitcoin in different ways, maybe that's enough of an operating business. But you do have to have something other than just the treasury to be included in a bunch of different indices in the U.S. Otherwise, you're a bank holding company, and you can't do this business model.
Okay, so over time, you think we'll continue to see a wave of these come in as Wall Street and different investors are trying to basically analyze these, understand them from a valuation perspective. You think some of the differentiation might come from the actual operating businesses that they have, plus the Bitcoin, but those two should be pretty closely aligned. Um, yeah, what do you think? Overall, do you think that having so many of these will be viable over the long run, though, as let's say Wall Street, different investors start to understand this? Because I'm trying to wrap my mind around, I think other people are as well. um why not just buy a MicroStrategy, or why not just buy a MetaPlanet, right, to have that Japanese exposure, that regional exposure, if you're an investor and you're curious in this space? Why wouldn't it be the case that the industry essentially wouldn't shake out to just be the top one or two companies in the space?
I think it's inevitable that there will be lots and lots of them because they can be creative with different offerings, and those offerings are going to have different price points and different risk reward trade offs. And there's a bit of a law of large numbers, law of small numbers thing. So if you get one going and people take a bet on it, if it starts tiny, it's going to grow. If it does well, it'll grow faster than something that's already very large. So I think you'll always have people betting on the stock of something new, and then you'll be able to mark out different risk reward trade-offs and different durations and things like that for the prefs and for just debt offerings of different kinds. And just because MicroStrategy has successfully offered 4 perpetual preferred offerings this year doesn't mean that duration is dead as the debt financing piece of these LBEs. There's actually a much larger pool of capital out there. It's institutional capital that needs to match duration. So they actually want an instrument where the principal is going to get paid back in 4 years, 5 years, 6 years. They don't want to buy this preferred stream. The preferreds are great because that's really popular with retail because it's kind of replacing their yield bearing money market accounts or their dividend stocks or their, whatever, life insurance or something, or treasuries. Basically, it's like people are thinking of it as like a treasury that pays 10% instead of 4%. Seems like a better deal. But I think there's so much room for other flavors of offerings, and MicroStrategy is not going to do everything.
Yeah, no, it's a great point. The product differentiation there, MSTR can't do everything, of course. And maybe the last point on this, but I'm just really trying to understand this. So, like, if I were to think of like a Walmart, right? You have your Walmart, you have your Costco. You know, um, you think about most industries, there's usually, and that's probably the wrong example. It's like Walmart, Target, but you think about most industries, it's usually one big player, and then you have like your second option, and then maybe a third or fourth. And then when it comes to investors, they typically want to own the top two in the space. So I would imagine, even though you're making a great point that there will be new products that need to come to market, I would imagine that over time there would be some sort of saturation, and even 10 companies seems like too many. You know, two, three, maybe four over time. I can see your point though about new ones always maybe trying to come to market to compete with the incumbents, but in terms of long-term sustainability, it's a little hard to see how we could have so many of these and how so many of these products will be needed, that we need so many companies to bring them to market.
All right. So Tom Lee, founder of Fundstrat, regular CNBC guest, spent 7 or 8 years talking about Bitcoin and Bitcoin only. He got himself yachts for the next 4 or 5 generations of Lees, getting paid out by Joe Lubin and friends to
Hey, Tom Lee's the GOAT. You've heard it. You've heard that.
become a meth shill. So he's shilling Vitalik coin now. Um, do you believe everything that Tom Lee says is exactly what he actually believes when he's on TV now?
I don't believe, no. I mean, you don't, you want to question everything. I think you want to question everything. I do think that what he's been saying in particular makes sense, and that it could be possible. It'd be hard to refute to just straight up just refute what he's saying. He's
Oh,
making
it's so easy to refute everything that he's saying. My point is, he just spent 7 years saying the opposite, saying that there was no thesis for ETH, and now because he has the yachts, he's saying that there's a thesis for ETH.
Oh, no, that's not the case.
It
He
is.
has been no. He's put out research and has come out and said that he's been long both Bitcoin and Ethereum since, I believe, like 2017. I think Bitcoin was 2017 and ETH might have been around that time or a
Tiny,
little.
tiny, tiny little bit, but he only was bullish about Bitcoin publicly. And he's a friend of mine. I've known him personally for many years, going back to 2019. So my point is, people talk their books. And so what you have in this Bitcoin treasury space is two very loud, large participants in Bitcoin Magazine and in Bitwise that, for their own ends, for a long time, and this was actually very good for Saylor and MicroStrategy as well, to promote the idea that there would only need to be one per market. Bitwise did this because they were losing AUM to MicroStrategy, and they wanted to make sure that the bleeding would stop there. And so they decided it was in their interest to promote, and this was Jeff at the time, along with Matt and the crew, to promote the idea that there would just be one Bitcoin treasury company per market. That then became David Bailey and Bitcoin Magazine strategy, was to kind of use the conference and their megaphone with the media and everything to go and like promote one per market and try to be the champion of each market and kind of like anoint the winner and then market it with the conferences and the media, et cetera. When it became obvious that Saylor would have too much of a target on his back if he was the only one in the US, and that by far the bigger risk was being singled out and having bad things done to him, it was in his interest to promote as many of these as possible in the US so that he'd have friends and it would look like regulators or legislators were like taking out an industry, and it would be very like un-American to take out that industry, and he needed other people to go to bat alongside him in these various negotiations to get rid of like corporate alternative minimum gains tax and like, favorable tax treatment for FASB, et cetera, et cetera. So he needed friends, right? And it's actually very much in his benefit to have a bunch of shats out there running around looking for the same thing, the shitcoin asset treasuries, because those are the guys that actually bought DC. They paid for 48% of the last election cycle. And those are the guys, trying to pump their coins and trying to pretend that there's actually still, some kind of store of value thesis for shitcoins, and, that they want yield in these, token stocks or whatever the fuck. So they're going really hard at that, but that's actually that's very beneficial to Saylor, because it means that you have this protective shield of the shitcoin money, where they have a lot more money in general because they print their tokens out of thin air and just give it to themselves. So they can pay off lobbyists like nobody's business. They can pay off legislatures and, just like buy elections like very, very easily. And so he recruited a bunch of these people by just not even being friendly, and he still backhands the shit out of them from the stage, but it's like very sneaky. And he doesn't say the things that he used to say about crypto. All he says is like they're a different asset class, and
Yeah,
that's
yeah,
the worst thing he says. That's not the types of things he was saying from 2020 to 2023.
yeah. He
He
used to
was
say they would be labeled securities, but that didn't actually happen.
not just that they would be labeled securities, but that they would all go to zero, et cetera, et cetera. It was very aggressive, right? But for survival and for really if he, I think he honestly believes that, and I think he's right. Personally, I also agree that what Microstrategy is doing is opening up the financialization of Bitcoin and the tranching of Bitcoin returns into various flavors of risk reward revenue streams, or investment returns. Like, it is a good thing that he's doing, and he's just playing some 4D chess, kind of jujitsuing and using all the energy of the other Bitcoin treasury companies and the entire crypto complex to further his goals and further entrench Bitcoin in the financial system and in the regulatory complex so that it can't be fucked with. So broadly, like, very, very successful strategy to kind of co-opt the money and energy of the crypto people in service of Bitcoin. Um, so he needs lots of these companies all clamoring for the same thing so that he can be protected by the crowd and not have strategy get singled out. As Bitwise saw that this was happening, they flipped. So they flipped late last year, and they decided, you know what, it looks like a lot of these are coming. We're going to serve them. We're going to play with them. We're going to, change our narrative and slowly back away from the table of saying that there's only going to be one per market, and we'll roll with it too. And we'll create, an ETF that will hold all these Bitcoin treasury companies, and we'll create another ETF that holds their debt and go market that. And so they started doing that in December, January. And of course that, co-opted Jeff's brain, and he ended up having to get into the space full time because he saw that that's where things were going, and now he's running one. And I think Mag is like the last one to fall because they obviously are like deep into their marketing and their strategy about having a national champion in all these different markets, and that's not going to work either, because
Which
they're
company is this?
Bitcoin Magazine.
Oh, okay, gotcha.
Yeah, so that's not going to work either. There's going to be multiple in all these markets. If there's a good market for Bitcoin treasury companies because there's an arbitrage for some reason, then there will be multiple competitors. So you saw the SoftBank backed competitor to MetaPlanet launch a couple of weeks ago. And so that, I think, will do great because it's, obviously it's a great market for this play, and you've got somebody that's starting off of a smaller base, and it's going to get a lot of people betting on it, and we'll see what happens. And I think there will be multiple in Sweden, and there's already multiple in the UK. There will be multiple in France. There'll be multiple in Brazil, and there's no reason that there should be, just one in any of these markets where it's an attractive play.
Sure, sure. Okay, Corey, you feel very strongly that there'll be many of these, and that many in the same region can succeed over time. Um, Wanted to ask about because you brought up the Tom Lee and the E thing, and I think if Tom were here, he'd probably say Bitcoin and Ethereum are friends or something like that. And so just to maybe pose that simple question to you, why um, it seems like it's the conversation about Bitcoin, but and I totally hear you. I understand. You're calling out these other cryptos, Ethereum, and these other strategies that are being run in terms of these treasury companies. Yeah, why is that the case? Why is it that perhaps they can't coexist, or like there's Bitcoin, and then there's this other stuff. Like, why? It seems like
They already do exist, so they are coexisting by definition.
why is it necessary to like sort of maybe bring down some of the others? Like, why is that?
Well, no, it's a competition for capital and for mind share, and also just trying to educate, the investing public and Wall Street on what's real and what's not. So, you're in that respect, that's around treasury companies. Basically, the summer and fall has been a lot like 2017 to 2023, where we fought it out with shit coins for in crypto casinos, right? That was like you know Swan and River and Strike and Unchained versus Coinbase for 6 years, and Fold, right? So uh, in the treasury space, it's kind of similar, and they ran out kind of all the same narratives. And Lubin is out there, he doesn't actually believe the things that he's saying anymore because they've been proven wrong already. But he's trotting out, basically the same speeches and the same media appearances that he did in 2017, 18, 19. And they kind of stopped, right? You haven't really seen anybody claim that Ethereum is a store of value for years until this summer, because he needed to repump and try to reinflate the narrative briefly, or they were going to completely lose their kind of like semi peg range to Bitcoin, and it was just going to fall off a fucking cliff behind these Bitcoin treasury companies. So it wasn't even necessarily that the shitcoiners, mostly New York based, needed to do it for themselves or even saw it as that much of an opportunity. They just needed Bitcoin not to run away with it. And so even if there was no chance of the shats actually succeeding, which is the case, they needed to go and shit in the pool and pollute it and fuck it up for everybody else. Otherwise, Bitcoin was just going to run away with it. So if you think about like the value of the massive stack of self-gifted pre-mined shitcoins that these guys have, they needed to actually destroy the Bitcoin treasury narrative as best, or dilute it as best as they possibly could. And that was basically the move that Lubin pulled off this summer, was to try to make sure that it got polluted and that the Wall Street companies all talked about it as DATs, and that these are Bitcoin DATs, and that it wasn't just a Bitcoin thing, and that these other things could be viable, underlying assets for treasury companies.
Yeah. I'm not too sure how Lubin's treasure. I think that might be SBET. How well that's doing.
Well, it's not just him; he's behind all of the Ethereum plays.
Okay, but yes, the Bitmine one that Tom is running. So Tom would make the case that Bitcoin is the store value asset. Ethereum is focused on stable coins and will essentially be the rails or the blockchain that Wall Street moves on to. Whether that all happens to the scale which he talks about, I don't know. But that's an interesting idea, number one. And number
Let me
two,
ask you something.
there's a relation between those.
What are the fees? What is the difference in the fee for a $1 ETH transaction versus a $10 billion ETH transaction? What's the difference in the fees between those two transactions?
I don't know the exact fee rate, but by the way you're asking the question, I imagine they're
They're the
relative.
same. It's just a transaction.
Yeah,
It's just
exactly.
it's just the gas fee for a transaction. So having volume like settle between financial institutions that have their own ledgers on what they might call a layer two or whatever, even if they do settle on Ethereum for some reason, that doesn't accrue any value to the Ethereum token. And there's almost no volume on ETH versus Tron. And in a couple of years, as you see the volume of stablecoins take off on all these private chains and all these corporate chains, whether it's Stripe, JP Morgan, like whatever, Tether's launched two more kind of like, backing two more cheap stablecoin focused chains. Like none of this shit's going to happen on Ethereum, and whatever little that does is not going to accrue value to the token. Again, there's no reason to hold value in something that decays in value versus Bitcoin. Even if you give a yield in a shitcoin, if the shitcoin is going down so much versus Bitcoin over time, like who cares that you have 22% more meth coins than you do when they launched proof of stake back in 2022? You're still down over 50% versus Bitcoin, even including the 22% yield in the shitcoin.
Yeah, I think the case Tom would probably make though is that they it's not that Wall Street would want to hold the tokens in terms of looking for an investment return. But it's actually, if they're going to use the Ethereum blockchain, that they would want to hold the tokens to help secure the network, and to have a stake in the thing that they're, running their operations on, right?
They don't need it. They don't need it. And they can just use their money to influence somebody else that holds some tokens. Like there's no reason to hold a bunch of shit that's like decaying in value, for supposed like network governance. It's they can influence those people that have network governance through other means just by paying them a little bit of extra money to vote a certain way. You don't need to hold the tokens to influence the governance of a shitcoin.
But someone would need to hold the tokens. The people that they're paying.
Yeah, but that if they are not holding their value versus the hurdle rate, the thing you're most compared to, which is Bitcoin, then there's no reason to store your value in meth.
Yeah, it's a good point, and I too believe Bitcoin is the hurdle rate, but I don't know if Wall Street thinks like that, because if that's the case, why aren't they all in on Wall Street? Why aren't they all in on Bitcoin? It's a 2.5
Because they've been
billion.
subjected to so much fucking shitcoin marketing for so long. And because all those companies, Circle, Coinbase, Ethereum, they're all in New York, meeting with Ripple, they're all in New York and DC, constantly spreading money. They have way more money than Bitcoin companies because they got to print it out of thin air. And your success as a shitcoin marketer is like, how long can you keep your token valued above zero? Which is why Ripple is actually like by far the most successful shitcoin company in history.
But why would any of this change, right? If this is what has played out, aren't these people only going to get bigger and stronger? Like, why would, even if you're right that Bitcoin is the true hurdle rate, that none of these assets compare to it in terms of its value, and that all these other coins will go down in Bitcoin denominated terms, if socially, this is the way things are structured, and if they could just keep printing this money out of thin air, like, why would anything change?
Well, they can't get away with printing a lot of the existing ones out of thin air. They're kind of stuck with what they got, which is why like the long tail monetization of their shitcoin piles is like so valuable, because they can't get away, Consensus and the Ethereum Foundation can't get away with printing a bunch of new Ethereum for themselves. It was a one-time gift they granted to themselves. So they don't have endless resources. So it is important to them to try to keep the price up as much as they can so they can continue to like dump on their retail suckers and monetize that over time like Ripple does.
Okay.
Um, so I think all you have to do is just let time pass and the charts continue to show these things declining in Bitcoin terms, right? I mean, there's out of 30 million altcoins, there's only been two that have ever had a second all-time high in Bitcoin terms. So really just like the market handles it over time. Like Ripple was higher in 2017 than 2013. Doge was higher in 21 than 2017. Both of them are down over 80% in Bitcoin terms since those highs. That's the magic of altcoins. You can count on them basically never having a new all-time high in Bitcoin terms. They always get one pump.
Get
Let me
to
let me tell you the bull case for crypto, blockchain, DeFi, NFT, whatever. The absolute most bullish scenario is that they bring some incremental improvement to financial IT. And I think that's happening. Like sequencers and private keys and consortia and 24/7, cheap settlement times and being able to send dollars and stocks around the world, kind of instantly and near for free. Like that stuff is all valuable and it's all pretty cool. And State Street is a pretty valuable company for custodying, tens of trillions of dollars worth of stocks and bonds, right? They don't get all the value of the things traded on their rails, but they get some value for making that easier and better. So I think that will be interesting, and I think it's cool, and I think having tokenized Apple stock and tokenized Stretch and tokenized bonds and tokenized treasuries, like that is actually what will save crypto DeFi, because the way that they're writing the legislation, the way that Coinbase is currently writing the legislation that their legislators will then pass is they're saying you KYC on the way in, and then it can trade all over the world on crypto platforms and DeFi platforms, and it only gets KYC'd again on the way out when you sell the token for cash or exchange it, right? And you ask any of these crypto traders, crypto hedge funds, like, do they want assets that, the underlying decays in value over time, like, shitcoins, or would they rather have something that's like a stock or, a bond or something? Like, would they rather have Stretch that's just tokenized and has 10% yield backed by Saylor's Bitcoin pile? They'd much rather have something that's like automatically guaranteed to appreciate 10% per year compounding as the basis for all of this, lending and borrowing and leverage activity that basically is what DeFi is for. That's a lot better than having to do it with, Ethereum or some other, shitcoin as the basis for it. That has no reason for being and no thesis. So I think that's basically what will happen. I think that all of crypto blockchain will basically get saved by the tokenization of real world assets.
Yeah, that's a big market though, right? And a really big use case. And Bitcoin isn't competing for that, right? And so, yeah, I think Bitcoin is definitely the store value asset. Most things, if not everything, will go down over time when price of Bitcoin. But I do think there are some other good use cases for some of these other tokens, and I don't think
not the tokens, because it's always going to be cheaper and faster the more centralized it is, and so the tokens are just kind of extraneous and not necessary for it. It all basically ends up just running on centralized databases over time. Like, would you rather trust fucking Tron or Google? Who's more trustworthy, Google or Justin Sun?
I don't know, but
I guarantee you, I know how everyone on Wall Street and High Street is going to answer that question. It's Google, not Justin Sun.
yeah, of course, of course. Um, yeah, so value in some of these other blockchains, I think with those blockchains being valuable, there could potentially be some of this value creation in terms of their tokens as well over time. I think that's just going
Disagree,
to
but I think that the tech can be useful, but not the tokens.
okay. Well, yeah, we'll check back in on this. I love the I love the debate and the discussion. Wanted to ask you about if we can go there, Sequans. If I know people mispronounce that one.
No,
Uh,
you pronounced it like the CEO. My
oh,
French friends are like, "Oh, it's Sequans," and I'm like, "Well, first of all, he has an extra S and he calls himself George, and he says it's Sequans, so I'm going with George and Sequans."
all right, Sequans. There we go. Can you talk to us with the time we have left? What's the strategy there? As we talked about earlier,
Yeah.
from my viewpoint, it's I think it's going to be pretty hard for these Bitcoin treasury companies and these treasury companies in general to differentiate themselves. You think that's going to be a more viable thing? Can you talk about the strategy at that company?
Yeah. So look, I think this is a group of companies that basically launched over the summer, and there were 6 of them that have like mid-sized Bitcoin stacks, and got off the starting line when there were probably another 100 that failed. So there were a lot of deals that tried to get done and couldn't get done. So just being in the mix is a win. First of all, second of all, the market is coming toward you as prefs and different, Bitcoin underlying debt instruments get created and popularized. It opens up the opportunity space for all of these companies with piles of Bitcoin in the, mid single digit thousands. And then the Bitcoin price goes up, and that increases your NAV and gets you even closer to being able to sort of unlock innovation and be able to start offering and tranching your Bitcoin returns, which is what you want to do. You want to use that leverage from a credit offering to juice your Bitcoin returns and add beta, make a higher beta for your equity. And that attracts capital and opens up your options chain and increases, liquidity in your options chain. And then converts open up again, right? Converts were used very successfully by MicroStrategy for a long time. And I think they will continue to be used by lots of these Bitcoin treasury companies, even if MicroStrategy stopped using them. Again, there's a massive market for that. The institutional investors like the duration matching of knowing they're going to get the principal back, which you don't get with the strategy prefs unless you sell it. So yeah, I think there's so many different options here. There's so much creativity left to be explored. There's so many different models that companies are working on. Uh, there should be an announcement this week by one of the companies in the space where I think they've recruited a few thousand more coins from like OG hodlers and figured out a structure to, convert that into shares without incurring cap gains tax, which I think is probably what MSTR did. That's my guess. With that 25,000 coins is probably like OG coins that got checked in but passed the cap gains onto the stock somehow. And that's basically how the European companies are all kind of growing with those converts. They're not making people sell their Bitcoin. They're checking the Bitcoin in, not incurring cap gains tax. And then they have like a 5-year convert with a 30% out of the money strike or something like that. So I think there's just, there's a new idea every week and everybody's talking to each other and looking at it and checking to see whether it's applicable. And like, it's just so early to call it quits on this. I mean, the fact is there's so much money out there, so much institutional money, so much locked capital with, tax advantages of different kinds. Like none of this is going away anytime soon.
Okay. One thing I have noticed is that the Bitcoin purchases have slowed down over time. I think in July, you guys were purchasing, or Sequans was purchasing weekly. In August, it was bi-weekly. I saw that in September, there was one purchase. I think today you guys announced a purchase. We're in October now. But what's going on there? Why the slowdown in terms of the...
Well, we raised 384 million, I think, in July and deployed it as fast as we could. And then after that, you've got some money left over, and then you have basically, you have to grow inorganically through different maneuverings. Like you can, go and raise Bitcoins from OGs, or you can get a direct offering and negotiate with some investor to come and do essentially like a second pipe. Or you monetize the existing business, which is obviously something that George is working on every day because they do have valuable IP. Yeah, because that's completely non-dilutive to existing shareholders, and they have two successful business lines with lots of international corporate customers, and they have a lot of IP, and historically that's what they've monetized. So he's working on, are they going to sell off pieces of the business to other companies in their space, in the semiconductor IoT space, or are they going to sell off some of their IP? They sold, I can't remember if it was either 200 or 400 million. They sold a bunch of patents to Qualcomm last year for hundreds of millions of dollars.
Okay, so yeah, that would be interesting. It's kind of like it's kind of circling back to our earlier discussion about if you could get a really good operating company or some kind of operating company that has cash flow to buy Bitcoin. That's interesting. But I do want to talk about the pipe. You brought that up. Maybe it's the elephant in the room. Yes, that was a big transaction that brought in a lot of cash, allowed you guys to buy Bitcoin very quickly. But some early retail investors, were blindsided by that, maybe didn't really understand the deal. The stock ran up like crazy and has subsequently fallen since then.
I can just describe what I saw happen. So I think the pipe crossed at $1.40. So that's first, is that so the investors, they put 195 million into that pipe to go buy Bitcoin. They bought it at $1.40 a share. When their shares unlocked, a month and a half later, on the day their shares unlocked, the opening price was $1.43. So the round trip to 4x NAV and back, it went from like $1.43 to like $5 and then back down, had no participation from pipe investors. That was actually just retail, like driving it up and driving it down. And then you have to remember, as it went up to like 4x NAV, the MNAVs for all the other companies in the space were a lot higher than that. You still had, MetaPlanet at, I don't know, like 8 or 10 or something like that. Naka was, 20x MNAV or something like that. So it just it didn't really register that much. And it was a really quick round trip. So it sucks. And I don't think that, it's probably still I think I just penned something else, but for like months I've had a pinned tweet that basically said, unless you're a sophisticated investor, at least 80% of your portfolio, that's like your Bitcoin portfolio allocation, and this is for high net worth people, should just be 1x long real Bitcoin. Like you shouldn't be betting the farm on stocks of any kind, let alone something that you don't understand. And like, if you don't read the statements and don't understand the statements and like don't know the dynamics of what's going on, like this is risky shit. So that's, I guess, kind of what happened over the over the launch there. The pipe guys that didn't sell are underwater, and they're holding because they know that if Sequans sold their Bitcoin stack today, like literally if they sold their stack today, they would pay off the convert because there was 185 million dollars, 195, 189, so 189 million dollar convertible note that went along with that. So they'd pay off the convert, and the Bitcoin net of that would be $16 a share. So, that's that's kind of the math. None of these guys are like rushing to sell. They're waiting to see what happens, because if the price goes up, they know they can always just kind of wait for Sequans to exit the Bitcoin position if they choose to. So there's not a lot of logic for the stock to trade where it is when they have monetization options for the business. And they can also, if they wanted to just unwind the whole thing, then it would be like 15, $16 a share.
Yeah. Do you think that's something management would actually consider? Because I know the those pipe investors, they're about flat now, but the folks who bought at that 4x MNAV, 5x MNAV, that top, they're about 80% down. So like,
Again, just like I've met one person in my entire life who bought most of their Bitcoin position at the peak in 2021. There's one guy who splits time between US and Turkey, and I've met up with him in Istanbul, and like he's my only person I've ever come across. And I ask sometimes on Twitter and in Telegram groups, like, do you know anyone that like got their whole bag at the peak? Or do most people kind of just buy at different price points? So if you have a massive life affecting bag of any treasury stock that you acquired at the peak, like that's a life lesson, and you shouldn't do that. That's a bad idea. It should be, something that you gamble with just like a little bit and place a trade. I would be disappointed and I'd be unhappy about it. But also, I don't necessarily think that that was a bad trade at the time, when the MNAVs of basically all the other competitors in the space were a lot higher than the absolute pico top of Sequans a few days after the launch. So it wasn't, you shouldn't even you shouldn't be mad at yourself for placing the trade when it looked like the MNAV could expand from there to be in line with the other ones. And then basically the market kind of shit the bed and just compressed all the MNAVs from MicroStrategy to Metaplanet to everybody on down. And so, you didn't even make a uniquely bad choice if you were one of the few people that, bought a bag of Sequans at $5 when it was there for half a day. That wasn't even necessarily a bad trade, because it looked like a discount to their shit going on in the market, and then the market got crushed. But it was a trade. I hope that wasn't anybody's life savings, because that would be stupid.
Yeah. All right. No, thanks so much, Cory. Appreciate that. And imagine it sounds like you think the company does have some optionality. There are some that they'll be able to do, and so those are reasons why maybe some of those early investors are still sticking around. As we close here, just wanted to get your take on, we're in Q4. This is seasonally the best time for Bitcoin's performance, especially in the halving year +1. What are your expectations for Q4? And then as we look into 2026, there are a lot of people calling for perhaps an extended cycle, not just randomly, but we do have a lot of tailwinds going on, a more dovish Fed. There's political capital, perhaps a extended extended business cycle. So kind of how are you thinking about this? If maybe you're putting on that Swan Bitcoin CEO cap. How do you think about this?
Yeah. So let's see. I think cycles aren't over until we see one not happen. So, we did not touch the 2013 all-time high in 2014. The whole year was lower. Not to mention the entire of 2015 and 16 was lower as well. So they didn't hit that until January of 17. And similarly, there was no point in 2018 where the price crossed the all-time high of 2017. Also, by the way, didn't hit it in 2019 and didn't cross it until mid-December of 2020 was the next time that we crossed the all-time high of December 2017. So it's 3 full years later. And then, same thing, 2022, the price never got close to the all-time high of of 2021, which was like 69K. And, we got the kind of ETF pump at the beginning of 2024 where we touched, I think, 73. So it took that long. What was that? You know, over 2 years and 3 months, something like that, to recover the all-time high from November of 21. So, I think there's more than a 50% chance that the all-time high is in this calendar year. That's kind of, what I'm betting on. I'm banking on that dynamic continuing to some degree. I think it would be super cool if there was a new all-time high in 2026, and I think that would be another notch in the belt for those of us that want to kill cycles. I do want to kill cycles. They diminish over time, but they're not dead yet. And then the other thing we'll want to watch is, how large in magnitude is the percentage drawdown from peak to trough. So whatever the new all-time high is, historically the last 4 drawdowns have been, I think, 94, 87, 85, and 77. And so, scarily, we would be on track if we have anything less than a 77% drawdown from peak to trough. So interestingly, like, let's say we hit 200. If we only go down 55% from 200 to 90, it's a massive fucking win for the maturation of Bitcoin as an asset class.
I'm smiling. Like, wow.
I know. So have some perspective.
Yeah.
Last cycle we actually had a lower low than the previous all-time high for the first time, right? We went down to 15.5, which was below the cycle peak. December of 2022, the price was 15.5, which was lower than 19.7 from December of 2017. So 5 years later, the price was lower. That's fucking brutal for a lot of people to go through that. And so, I would love to see a return to having the trough of the next bear market not go below 69.4, which was the all-time high in November of 21. I would consider it a huge win if we never see 5-digit Bitcoin again.
Mm-hmm. Mm-hmm.
So if we go to 180 or 220 and the drawdown keeps us above 100,
right,
that's a massive win for Bitcoin globally and for human freedom and economic liberty and all the things that we think Bitcoin will bring about. That will be a really good signpost that we're on the path.
Yeah.
But, have some perspective, respect the history. Don't think this time is different until it's in the rear view.
For sure. And Cory, how long have you been in the space, just to give folks perspective here?
Yeah, so I came in, I had swings and misses like everybody. So it's in my email from 2012, and people tried to get me into it in 13 and 14. I just didn't take. But I got in May of 17, and I wasted almost a year on crypto. So I spent 10 or 11 months before I understood what Bitcoin was and actually got it. And then so I've been Bitcoin only since spring of 18.
Gotcha. Okay. And then because people are probably dying to hear this, when can folks expect to hear, more concrete plans from the Sequans team?
It's just all the time. If I had material, non-public information, then I would, it would already be out there. I can't share anything else other than what we already tweet. So just watch the Sequans handle, and I usually post about it or retweet whatever is going on.
All right. Cory, thanks for your time. Pleasure having you on. I know we get into things there, but it was fun, and hopefully, we're all able to learn and keep getting better from this.
Yep.
So.
No, man, these things are only fun if somebody's playing the devil's advocate and doing the contrarian thing. So it's a better way to get good clips out of it.
we're not chasing clips here, just stats.
Oh, my team does though. So my team will now go through this and look for good aggressive Cory clips.
All right, Cory, awesome. Well, all right, take care until next time.
Okay, thank you. Bye, Charles.